This is Trend Following Radio, where great thinking comes alive. Nobel Prize winners, legendary traders, best-selling authors, and the pros that know what drive us irrational human beings. I am your host, Michael Covel. Not filtered, raw, honest. That's my passion.
What follows is a speech of mine from September 2023, just the other day. I figured I'd give a little replay here on the podcast, a little high energy, high octane, a little fresh, Mike. There's a lot in this speech for the newbies to the experienced. I hope you enjoy.
Welcome, everyone. Thank you for joining us. Without further ado, it is my pleasure to introduce Michael Covel. He's the president and founder of Trend Following. He's best known for popularizing the trading strategy and trend following. He has taught trend following strategies to over 10,000 investors and traders across 74 countries for over a decade. He's also the author of 8 books from 2004 to 2023, including the international bestseller, Trend Following and Turtle Trader. His books have been published in 16 languages. Mr. Covel hosts the podcast Trend Following Radio. To our live viewers, if you have any questions for Mr. Covel, please type them in the chat box. Time permitting, I will announce the questions at the end of his presentation. And with that being said, Michael, I'll be right here if you need me, and the floor is all yours.
Thank you very much. One other thing from that bio not mentioned. I happen to be in the United States of America today. I happen to be outside Washington, D.C. I spend the vast majority of my time in Asia, though. And you might be saying to yourself, why do I do that? Well, short answer, I probably prefer a more traditional culture. So there you go. I'm starting it right off with something controversial. Now look, I want everyone listening to make as much money as possible. I want them to make as much money as possible in trend following. But you got to start somewhere. And today is the start. You're not going to learn how to make $1 million overnight today, but I'm going to put you on the right path. This is investing. This is trading, right? Nothing changes. This little cartoon, it doesn't make a difference whether you're trading NFTs, crypto today, whatever it is. It's the same thing as the Dutch going crazy trading tulip bulbs in the 1600s. It's human psychology. It's the madness of crowds. That's all we are. That's all we will ever be. There will never be an improvement because there's always a new army of new people growing up and coming to the same mindsets of getting rich quick and fear and greed, and it never changes. And if it never changes, how can we profit from it? That's the goal. Look, again, some of the things I'm going to say today, it's all about this. It's all about the truth to power. It's all about saying what is real and not just the propaganda points that we're so used to hearing. Because there is an enemy. I mean, if you're going to get to the point of understanding why trend following works and how you can be a trend following trader, you got to know who the enemy is. The Federal Reserve is not your friend. Inflation's not your friend. Look, inflation's not coming from productivity. It's not coming from this. It's not coming from that. Inflation's coming from an increased money supply. But hey, guess what? With trend following, you don't have to know a damn thing about that. That's not the point. Jim Cramer, CNBC, not trend following. The Big Short, fantastic movie, not trend following. However, I will say this, during that time period, and I'll show some graphs and charts and tables in a minute, but during that time period of 2008, specifically October 2008, trend following traders made a bloody fortune. They didn't do it like the guy in The Big Short, though. 1998, Bernie Madoff, long-term capital management, another just the Ponzi schemes, the frauds, TV shows like Billions. This is not how the real world works. CNBC, if you're watching CNBC, trust me, turn it off and never watch again. I just saved you who knows how much time. And look, if you're one of these people that are looking at charts and your charts look like this, you've already lost. And if your desktop looks like this, forget it. There's no reason that anybody listening really wants to be sitting in a chair like that guy with, what's he got, 7 monitors? Who wants that? That's ridiculous. Nobody wants to be in front of 7 monitors all day wearing a headgear. And trust me, the people that make the most money on this planet do not. Look, there's always another epic crash. 2022, March 2020, 2007 to 2009, 2000, 2002. I mean, you could arguably make the case that after the NASDAQ crashed and bottomed out in the fall of 2002, the Fed jacked rates down, created the big short bubble that I was just talking about in 2008. Okay, they jacked rates down again, which ultimately led to the next bubble. Okay, Mike, you're saying great, nice little history. You got to have the foundation. Each of these time periods I'm talking about, like for example, 2002, trend following traders made more money than God. I mean, seriously, this was insane amounts of money made when the vast majority of people trusting the CNBCs, trusting the Fed, trusting Bloomberg, trusting mutual funds got their you-know-what handed to them. 1998, summer, boom, another one. 73, 74. All these time periods are time periods where trend following traders made a bloody fortune. 87 stock crash, same thing. Even back to the Great Depression. Look, here's what it's about. And people don't think about this. We can see the risks out there. What we can't see is what should scare the bejesus out of us. Because it's back to Nassim Taleb. It's the black swan. Are you ready for the black swan? Are you ready for the event? That's where trend following comes into play. But look, let's go back to the Anchorman movie. This is what most people think. I can rattle off what I've just rattled off in the last few minutes, but most people think they're going to buy the dip, right? And 60% of the time, it works every time. And that is the typical understanding of numbers. With that lead in, let me take you into something a little deeper, which is trend following, the specifics, getting into the mindset and some technique. There are 5 principles of trend following. Number 1, what markets are we going to track and trade? When do you enter a market? How much money do you bet on each trade? How do you exit a trade with a gain? And how do you exit a trade with a loss? Those 5 principles apply to any trading strategy. Any trading strategy, those 5 principles apply. However, the performance is the key. And trend following performance, as I will show you, is quite different. But let's take a step back also. When you think about your particular strategy you might use right now, maybe you don't have a strategy. Do you think like this? Do you think, what markets are we going to track? When do we enter? I'm talking specifically, I'm talking the day. When are we going to enter? What's the method? What's the technique? So when you place a trade, how much are you betting of your limited capital? We all have limited capital. Whether it's $100, $1 million, or $1 billion, it's limited. So how much are you going to bet on each trade? Is it 1%, 2%, 10%? I've asked audiences before, people will raise their hand and say they're going to bet 10% on each trade. 7 or 8 trades in a row wrong, you're down 70 to 80%. That's no bueno. But the last 2, 4, and 5, how do you exit with a gain and how do you exit with a loss? Terribly important. Because if you can control your losses, if you can worry about how much you're going to lose, and I'm going to talk about this a little bit more in a second, the upside will take care of itself. This is a simple way to think about trend following. You're never getting in at the exact bottom. There's no dip. There's no prediction. You are riding it up to where the trend peaks. Now, look, this could be any market. Let's just be honest. This could be any market. This could be gold. This could be Apple. We don't care. Bitcoin, it doesn't make a difference. We're trading human psychology. We're not trying to know the fundamentals. I don't care what CNBC says. I don't care what the president says. You think it makes a difference on how much money you're going to make in the next 4 years, whether Biden or Trump is president? Only if you're just taking whatever the market gives you. But that's not strategy. So how do you get strategy? This is some of the thinking, right? And let me go back here for a second. So what you're really looking to do, though, is you're not getting in at the exact bottom. You're not getting out at the exact top. You're capturing the middle meat of a trend. Completely counterintuitive to everything that's taught in universities. Look, I've done a podcast with 1,200 episodes. I've had some of the most accomplished traders on the planet on my podcast. I've also had some of the most accomplished professors on my podcast. Trend following is not taught in universities. Universities teach that markets are efficient, you can't beat the market, buy a mutual fund, sit there, and eventually you die. That's what universities teach. That's not what trend following is. Just another version of what I just showed, which is, again, you're following the movement of the market. Again, this is strictly a form of technical analysis, where you are following the price movement alone. So you don't care any of the fundamentals. Yes, you need rules. Yes, you need precise techniques. But first, you have to understand conceptually what we're doing here. And this is the goal. I mean, look, if you buy any asset, and this could be selling short any asset as well, if you buy, the goal is for the market to go to the moon. But we all have an uncle point. The uncle point, the pain point, the point that we have to get out, which means cutting your losses. So if you're sitting there and you've got 50 or 60% losses in whatever, you've already got bad technique. This idea goes back centuries. David Ricardo, famed British economist, he had the rule made famous by one of my trend following friends, Larry Hite. The rule is cut short your losses and let your profits run on. Meaning, you can't know what market is going to break out and be the next Apple or whatever. You can't know. All you can do is take a position based on your rule set, then wait. Wait for what? Wait for an exit. Wait for the market to go against you. How much does the market have to go against you? You need a set rule set, but it could be 5%, it could be 10%, it could be 20%. But you got to get out. So the idea here is you got to preserve your capital. Look, I'm sure some people listening have been to Vegas. If you run out of money, you can't play. So the idea here is to constantly get rid of losing positions and wait for the market or markets in your portfolio to start to trend. And if you get a handful of markets each year that produce big trends, who cares if you have a bunch of small losses? This is venture capital 101. Everyone knows how venture capital works. Venture capital makes a bunch of small bets and some turn into Google. That's trend following. So this is a trend following trader. Hopefully you can see this performance on your screen. Trend following trader, and he's up about 50% for 2023. But you can see over there on the far right under the year, not every year is positive. Not by any stretch of the imagination. But what's really interesting are the years when most typical mutual funds, buy and hold, long only, get creamed. He made a fortune. 2022, 89% up, right? 2008, up 108%. Very important month to look at in 2008, October 2008, up 45%. Ben Stein, the comedian, I guess if you can call him a comedian, Ben Stein, the comedian, is famous for saying, if you made money in 2008, you were doing something wrong. Specifically, October 2008, you were doing something wrong. Well, I think everybody listening, if you've not seen a performance track record like this, would love to have made 45% in October 2008. How did he do that? He was simply following a basket of markets. Some were moving up, he was long. Some were moving down, he was short. That's it. Did he know anything special in advance of October 2008 to help him to make 45% in 1 month? One of the most fantastic months in the history of markets? No, he had no idea of what was going to happen. He was simply following the trend. Another trend following trader down from Stuart, Florida, Dunn Capital, fantastic track record going back to the early 1970s. Had a chance to meet the founder of this firm years back. Really interesting individual, tough as nails, but you can see over the long haul, if you've been trustworthy of the trend following approach of Dunn Capital, which is similar to all trend following approaches. The blue would be Dunn Capital, the red would just be holding on to the S&P. Look, it's a big difference compounded. What I'm talking about today, not something new at all. Trend following performance has been tracked going back 800 years. You might be saying to yourself, Mike, how in the heck can we trade, or can we go back and find out how trend following did over 800 years? Well, quite simple. You can back test it, and there's data. So you can go dig through the libraries of Europe and you can find the data for assorted markets that we're trading. And you can apply a rule set and you can back test and you can find out how well trend following would have done, because you don't need the fundamentals. All you need is the price data. You can find these studies here on this webpage on my website at trendfollowing.com/resources. Just great foundation to bring you into the mindset of trend following. Just some quick charts. Look, these charts that are kind of in this kind of flat phase and then they all of a sudden break out, that's a typical trend following long move that would have captured it every time. Same here. This is all trend following, markets are going flat, something breaks out, trend following traders get on board, they don't know what's going to happen, and they ride it as long as it goes up. Or if they're trading the market on the downside, if they're taking a short position, same concept. Trend following doesn't make a difference. Long, short doesn't make a difference. Some of you might have some experience with technical analysis. A lot of technical analysis is hocus pocus, reading patterns, Fibonacci, WGAN, all this nonsense, right? Elliott wave. No, nothing. No, don't do that, please. Price. Yes, I'm being facetious here in the sense that why am I saying the three best indicators are the same thing? But they are. Price is the only indicator that you must follow. And this sums it up nicely. Like, look, you are getting in, you're hoping your profits will go to infinity in that upper right-hand corner, but you've got a fixed stop. So you're saying, let's protect our capital, but who knows how long that trend could go? Who knows how much money we could make? We don't know when we take that entry. When we take that entry in the center of this screen, nobody has any clue that it's going to go high, but you keep doing it. You keep doing it because, in the trend following mindset, we know typically you're going to have 35 to 40% winners, about 60% losers, and you're going to be looking at winners that are probably 3 to 4 times bigger than your losers. Crunch that math. It's not hard math, and you get a positive mathematical expectation, which for any of you gamblers out there knows you can bet on that. And that's what trend following is. And it's all markets. I don't care what you're trading. It doesn't make a hill of beans difference. Crypto, palladium, gold, oil, Apple, whatever new BS stock they're pumping that week. What's this thing they're pumping for AI? I forget, NVIDIA, right? Who cares? Who cares if any of us have any earthly idea what NVIDIA does? Who cares if any of us knew what Tesla was? It doesn't make a difference if you know any of the fundamentals of Tesla. And if you think it makes a difference, you're smoking something. It doesn't. All it makes a difference is if you're on the trend and it's moving and you're with it. That's it. Because look, human nature doesn't change. We're going to keep making bubbles, blowing bubbles up and down. Look, there's two different types of people. You got the first group. We all know them. They're scared, nervous, paralyzed with fear. Maybe some of you listening are like that. I hope you can change. There's the positive group. They're willing to listen to what I have to say today. They're going to go check it out. They're going to verify, like Reagan and Gorbachev. Reagan said he trust but verify. So today, trust my words, but verify. But this is why we all have a chance to make money. We have a chance to make money because this picture summarizes most investors. And if most investors are like this, their decision-making is not going to be good. And if their decision-making is not good, well, that's a chance to profit because that creates trends up and down. This is Daniel Kahneman. He has written a great book that you should check out, Thinking Fast, Thinking Slow. And he won a Nobel Prize for behavioral finance. He's the one that did, along with his partner, the hardcore work to figure out essentially that us humans are predictable in the sense that we make the same mistakes over and over and over again. Now, here's a guy that did not make mistakes. But guess what? He's a closet trend following trader. Yeah, believe it or not. Jeff Bezos. If you read his shareholder letters, and I have, he is fond of saying, like, look, everybody sees our successes at Amazon, but they don't see how many times we've screwed up, how many errors we've made, how many things didn't work out. So his point is, you have to try, you have to get on the rocket ship, but just don't ask what seat, just get on. Now, some things aren't going to work. Now, that's not such a good thing. If you get on the rocket ship and it doesn't work, you're dead. But from a trading perspective, we're not dead. We're just trading money. And we can cut our losses. We have stops. This was how I got into this subject. So I got into the subject of trend following through this movie in a way. So there was a famous trader back in the day named Richard Dennis, trend following trader. And in the early 1980s, him and his partner went to see this movie. And they watched the movie, and Richard Dennis had made a couple $100 million by age 37 in 1983. Billions today, or over $1 billion today. Anyways, his partner walked out with him, and the partner said, hey, wow, that's a great story. That can never happen. Take people off the street and train them. Richard Dennis said, no, we can do that. We can take people off the street. We can train them to be traders. They did that. They took these random students off the street, and 2 weeks of training, they taught them to be trend following traders. At the end of 2 weeks of training, they staked them with capital. They gave them 4 years. And at the end of 4 years, this group of 20 students made $100 million. Now, look, this is just one trend following story. But the great part about this story, it's nurture beating nature. That's the key, nurture beating nature. Now, look, you got to have some aptitude when you come to the table. You got to have some IQ when you got to come to the table. But if you take a bunch of like-minded people that are decently smart and they want to learn, this experiment proved that anybody can be a trend following trader. If you're curious, the entire story is in my book that sold best of all my books, The Complete Turtle Trader. The concept, though, of why this can really work comes to another podcast guest of mine that I'm fond of, Anders Ericsson. And he wrote about the practice called deliberate practice. So if you're willing to learn, if you're willing to do it, if you're willing to be a trend following trader, check out this episode. He'll tell you how anybody can do anything if they put their mind to it. Another interesting little analogy or thought here that we can have about trend following is the Babe Ruth mentality. Like, look, we're going to get a lot of strikeouts, but we're looking for home runs. We're looking for big home runs, Aaron Judge type stuff, Bryce Harper type stuff. Now, it just so happens that one of the most famous trend following traders ever, the guy that made his fortune with trend following to then buy the Boston Red Sox, I think he's won 3 world championships now since he bought the Red Sox, John Henry, made all of his money. Well, he's made a lot more now, but he made hundreds of millions of dollars to buy the Red Sox and then turned that into even more. But his whole philosophy was the trend following philosophy. That was how he made his money. And it was the Moneyball story, right? It was finding that edge in the numbers, trusting the numbers. Don't look at the fundamentals for predictions about what might happen tomorrow. That's all BS. It doesn't work. I'm sure some of you are thinking right now, I want to do this. Okay, do it. But I'm scared. Do it scared, right? Who cares? I mean, look, I said at the beginning, and I'll get a little more controversy here, but I said at the beginning about, liking Asia. The one thing I like about Asia, it's a little more practical for me, right? People might be scared, but they just do it, right? I think sometimes in America these days, we've got a little too much empathy, a little too much sympathy. I say just get with it. Back to the old Michael Jordan commercial, just do it. We've only got so much time, so what the heck are we scared about? Ridiculous. Just do it. And this is terribly important for the philosophy and the mindset of trend following. Yesterday don't matter if it's gone. I caught that clever line from Mick Jagger and Ruby Tuesday going back to the day, but yesterday is gone, so it doesn't matter. The only thing that matters is right now. Make your decisions based on right now. If a market is going sideways, let's say at price level 10 for let's say weeks, and it all of a sudden jumps to 20, then you're getting on board because the market is showing momentum to the upside, and that is a typical trend following signal. One of the most famous traders in the history of markets put this statement down about a year and a half ago. So even if you did not know about trend following today, even if you don't trust me, well, you might trust Paul Tudor Jones. He's a pretty bright guy. He's been quite successful. And he's pointing out that in the kind of climate that we're in right now today, chaos, volatility, people screaming about this, people screaming about that, emotions are high. How do you trade that? You trade the price action. The price action, the price of the market gives us the direction. It gives us the opportunity. We don't have to think about it. We just get on. That's the simple goal. 2 books you can check out. I mean, there's 8 books you can check out, but just some free advertising here. 2 that have come out this year. And hey, look, that's my best-selling book, one of my best-selling books, probably number 2. But that book, Trend Following, and excuse the very attractive ladies who helped me to design that great promotional ad, but that book right there, Trend Following, I promise you, and send me an email if you disagree with me, but I promise you that book right there will change your life. And if it doesn't change your life, it's so thick and it's so heavy, you can leave it next to the bed and use it as a weapon in case somebody breaks in and you got a problem. So this is a fun story, and this is a guy you should check out here as I wind down. Ed Seykota is one of the most famed trend following traders, somebody I've had a chance to learn from. He was kind enough to give that great endorsement for my book, calling it essential. But Ed has a music video on YouTube you should check out called the Whipsaw Song. And the Whipsaw Song explains everything I've talked about today in 30 minutes. He explains it in 3 or 4 minutes. Now, the problem is you might watch Ed sing that song and you might say to yourself, well, that guy doesn't appear to be an MIT mathematician, brilliant guy. He's singing a whimsical song about cutting your losses and letting your profits run. He's playing a banjo. That can't be serious. It's dead serious. And if you don't get it, he's fine by that. I'm fine by that. But for those that do get it, you'll appreciate it. You'll appreciate that you can take all of the essentials of trend following and summarize it to a music video. That's just great stuff. Look, trend following has been my life since I first heard about it, I think in the early 90s. It is just the most amazing subject. And so many of the concepts in trend following, they apply to our everyday life, right? Whether it's relationships. I mean, if you're in a relationship and it's not working out, cut your losses, get out. Why stay with it? If you're in a relationship that's working great, let the profits run, let it run on. This kind of mindset really helps us to let go of the drama, to let go of all the nonsense and just focus on the essentials. The essentials, what is the price? What is the price of the market right now? And do I need to take an action? Let me share something with you. The trend following trader I showed earlier that made 45% in October of 2008, he was trading a weekly bar. That means he was not looking at price data during the week except for one data point per week. One data point. So any of you out there that think your performance is being increased by listening to Kramer or Kernan or Faber or any of this other stuff, I mean, do it for entertainment if you want, but that's not why most people are doing it. People might say, oh, Mike, I do it for entertainment. No. They're listening because they think it's going to help them. It's not helping you. If Paul Mulvaney of Mulvaney Capital is using a weekly bar, shouldn't you stop with your life about what you're doing with your information overload and realize, whoa, if he only has to look at the market once per week to make trading decisions and he can make a bloody fortune, what am I doing? Trend following is key for the money. It's key for how much time you have to spend doing it, which is far less than a lot of other strategies. It's key for the stress. Because if you allow yourself to accept the introduction that I'm giving today, if you allow yourself to accept this introduction, your life gets a lot easier. A lot easier. And look, if you got friends and family that want to sit around and talk about all this other nonsense, let them talk. Just leave the room. Go for a walk. Go for a run. Do something else. It's just not worth your time. I hope today I have wet your whistle. Whether you know about trend following and you needed the reminder, or you're brand new to trend following and you're curious now, go jump in, do the work. Look, everything in life takes a little effort. If you're not willing to expend effort, don't listen to someone like me. But if you're willing to expend effort, I can promise you I just gave you a fantastic introduction that will help you make a damn fortune, guaranteed.
I see a time when those awake will understand how to make money in up, down, and surprise markets. Whether new trader or experienced, college student or financial advisor, protecting against a crash or just trying to make a lot of money, trend following offers everyone an answer in uncertain times. To get started immediately, send me an email, michael@covel.com. I will send you the right trend following steps to take along with my free video. But if you want to buy and hold, trust the government and trust Wall Street, this is absolutely not for you.